Hello friends, welcome to another edition of Quick Trading Profits with Apurva. Now we have heard a lot of times that the markets are forming a bearish divergence with the RSI, or a stock may be forming a bearish divergence with the RSI. So a lot of times I have observed that people do not use the bearish divergences in RSI correctly. So today we will see the correct way to use the bearish divergences in RSI, how you should spot them, and what is the correct way to use them. And secondly, we will see it with the live example of Nifty. So right now Nifty is forming a bearish divergence. So we will see what implications this could have on the current trend of Nifty. So let's get started with the chart itself. So here on your screen you can see the 75-minute charts of Nifty. Now in my earlier videos I have spoken about why I used a 75-minute chart over anything else. You can watch those videos. In short I'll just explain that the markets starts from 9:15 till and ends at 3:30. This is a total of 375 minutes, and if you divide 375 by 75, you'll get 5 equal candles. Now this is not possible with a 60-minute chart, so we prefer a 75-minute candlestick chart. So now on your screen you can see this is the price chart of Nifty, and in the bottom panel I have the RSI. Now what exactly is the RSI? So basically RSI is a bounded oscillator which moves between 0 and 100, and it measures the speed with which the Nifty is moving. So it is basically telling you the momentum of the Nifty or whatever price chart it is looking at. So RSI gives you clues into how the Nifty is likely to move forward, and one of the most important clues that it gives is of a reversal. So the bearish or bullish divergences in RSI gives you a warning signal, or before the actual trend reversal happens. But a lot of times people don't use this correctly. So let's see what exactly the bearish divergence means. So here, as you can see on your screen, the Nifty bottomed out in the month of March. From there it has been trending upwards. The RSI also bottomed along with it, and since then it moved higher, and both of them peaked out here in the month of April. From there on, the RSI again dipped lower, the price also dipped lower, and once again they were in conjunction in June. But from June, we have observed that the price has continued to move forward, move higher, but the RSI has continued to trend lower. It is forming lower tops. Uh, and it is forming lower tops when the price is forming higher highs and higher lows. So this is a classic example of a bearish divergence. So a divergence acts as a warning signal. So let's take a example of a car which wants to take a U-turn. So a speeding car won't take a U-turn all of a sudden. So it will slow down, it will give the indicators, it will give the indication that it wants to move left or right, and then the actual U-turn will happen. So similarly, RSI divergence also acts in a in the same way. So RSI divergence tells you that there is a chance of a reversal, but it's not necessary that the price or the trend will reverse. You have to wait for confirmation. So here it indicates, the RSI divergence indicates that the price action is slowing down. Even you can notice in the price action of Nifty, the peaks and troughs are getting, or bottoms are getting narrow and narrower with each passing day. Now I am recording this video on Tuesday early morning, before the market opens. So right now the SGX Nifty is indicating a opening of 100 points plus. Now there is a very likelihood that the Nifty will move up, and the RSI will also, since it's measured from price, it will also move higher. So one thing that traders should look at is the RSI level of 70. So RSI can continue to diverge for a long time. As you have seen over here, the RSI peaked out in June, and since then the RSI has been forming lower tops, but the indication becomes very much strong when the next peak of the RSI is below 70. So here you can see the dotted line is the level of 70, and right now the RSI is placed below 70. So if the Nifty moves higher by 100 points, then there could be a chance that the RSI may move above 70. But from a trading perspective, one should look at where this RSI is forming its next top, and if it forms below 70, then that could be a very strong indication that the chances of a reversal are high. But even with that, it won't make it crucial, or it's not necessary that the markets or the Nifty should reverse or top out. So for that we need a confirmation from the trend itself. So basically we have heard that bhav bhagwan che, and that's what is most important out here. Bhav bhagwan che, and indicator is the pujari. So wherever the bhagwan goes, the pujari goes. So the most important thing to watch out here is the trend itself. So as you can see out here, I have drawn this trend line. Now this trend line is a very strong indication. It has touched multiple times, and if the Nifty starts trading below this trend line, then that could act as a confirmation that yes, finally we are reversing. Apart from this trend line, you could also use a moving average. It could be any moving average, 10-20 day simple moving average, and even that could be used as a confirmation for actual reversal. So that's how you use a bearish divergence in RSI. So there are a couple of things. First is that the RSI should be trading below, should be forming lower tops when the market is forming a higher top. So that is the first thing. Second thing is look for a top in the RSI below 70. Below 70 would give you a stronger indication. As you have seen out here, the RSI could diverge for a longer time, and in highly trending markets, it would be the case that the RSI will keep on diverging, but the Nifty will keep on moving higher, or the stock would keep on moving higher. So you have to see that the RSI divergence happens, or the top in the RSI is below 70. So that adds a confirmation. And third, and the most important thing of all, is that the actual trend reversal, you should get a confirmation from price itself. So a trend line break, a moving average break, or a new low. These are the kind of things that would add confirmation to the bearish divergence, and only then you could act upon your view of the bearish divergence, that is by shorting index if you are an aggressive trader, or exiting from a stock if you have been holding it for from the bottom. So that's how you would use the bearish divergences in RSI. So that's all from me for today. Thanks a lot for watching this video. I hope you enjoyed it and it has added some value to your trading toolbox. So if you like this video, then please share it with your friends and family members who want to become better traders. Also subscribe to our channel. So thanks a lot and have a nice day. Also, don't forget to sign up to our free newsletter, the Fast Profits Daily. If you sign up to this newsletter right now, then you would get access to this free guide, how to trade the markets like a pro. So don't miss this chance and sign up right now.